In today's financial world, the rules are constantly evolving, often outpacing the legal frameworks designed to govern them. For decades, American capital, from pensions to endowments and sovereign funds, has flowed into global markets, always chasing the highest returns. But in recent years, nothing has attracted strategic money quite like artificial intelligence. By 2025, AI isn't just a buzzword, it's the central axis of wealth creation and a major point of geopolitical tension. AI companies, both public and private, have become the biggest drivers of billionaire wealth worldwide, delivering astonishing returns and fundamentally reshaping where and how money is deployed. A deep dive by the Wall Street Journal uncovered a striking trend. Elite investors raised billions from U.S. pensions and institutional pools, then funneled that capital directly into Chinese AI startups and tech companies. This happened precisely at a time when Congress was actively moving to limit such flows. This isn't merely finance, it's a complex blend of capital diplomacy, regulatory arbitrage, and a global tech race strategy all rolled into one. By understanding how this billionaire-led capital channel operates, you get a front-row seat to not just where money is now, but where the future winners and losers will truly emerge. This script will break down the playbook, the mechanisms, the risks, and the broader implications.
2. Where the money came from. U.S. pensions and institutional investors. When most people hear U.S. pension money, they usually think of Social Security, Medicare, or perhaps the state pensions that support our firefighters and teachers. What many don't realize is that large institutional funds, like the California Public Employees Retirement System, the University of California Endowment, and other major public pools, actively allocate significant capital into venture funds and private equity. In the case we're examining, a Hong Kong-based billionaire investor, Shen, a co-founder of Sequoia Capital China, managed to raise nearly $9 billion in capital before U.S. regulatory restrictions really began to tighten. That massive sum came from prominent U.S. institutions, including major pension systems and university endowments, all seeking to invest in global opportunities, with a significant portion going directly into Chinese tech firms that were building advanced AI capabilities. For years, these institutional vehicles have operated like the deep pockets of Wall Street, highly diversified, historically risk-managed, and always on the hunt for both returns and alpha, returns above the market benchmark. But when that relentless search for alpha clashes with national policy and strategic competition, you suddenly face a critical tension between fiduciary duty and national strategic interest. These U.S. funds directed money into vehicles tied to Chinese tech for several compelling reasons: higher growth prospects in emerging markets, often lower valuations of Chinese companies compared to their U.S. tech counterparts, diversification benefits, and the promise of long-term return optimization. But the absolute critical point here is this: these are institutional dollars, not the funds of retail traders or fringe investors. This is capital from regular people's retirements being directed straight into the heart of global tech competition. 3. The target: China's AI ecosystem. Let's cut through all the noise. The money didn't go into trivial ventures or speculative projects. It flowed directly into China's AI ecosystem, into companies actively building AI models, robotics, advanced machine learning platforms, and other foundational technologies. This isn't about China simply following U.S. AI tech. It's about them fiercely competing with it. And that right there is the crux of the geopolitical twist. A billionaire investor successfully raised U.S. capital to boost Chinese AI growth at precisely the time when U.S. policymakers were debating how to curb exactly that kind of capital flow. The companies that received this funding are truly at the forefront of innovation, working on everything from deep learning to autonomous systems. This means that American pension contributions, the very funds meant to guarantee stable retirements, have sometimes ended up on the opposite side of the tech race from what many policymakers intended. This scenario profoundly challenges the very foundation of how capital markets and geopolitical strategy interact. Money, in its pursuit of returns, is often blind, but the powerful tools and technologies built with that capital are actively shaping the 21st century digital battleground. Regulatory friction and the pushback.
By late 2025 and into 2026, U.S. lawmakers really started pushing back. There were significant bipartisan efforts to tighten restrictions on investments into Chinese AI and other high-tech sectors, largely in response to growing national security concerns. These efforts included specifying strict limits on U.S. capital flowing into technologies that could give China a strategic advantage. But here's the brutal truth. Regulations are almost always a step behind the actual capital flows themselves. By the time new rules are firmly in place, substantial money has often already moved. And crucially, institutions that raised funds before these new rules were tightened are frequently allowed to deploy them under grandfather clauses. This means a few key things. Billionaire investors are consistently ahead of regulators. They raise capital first, then chase opportunities globally, and rules later try to catch up, often too late to fully make an impact. This creates a kind of permanent arbitrage, strategic capital deployment happening much faster than policy can possibly adapt. There's another layer to this too. Regulators in China sometimes actively allow or even encourage foreign capital because it helps them build out their own AI infrastructure, strengthen talent pipelines, and expand their data ecosystems. So you have U.S. capital meeting favorable regulatory environments abroad, which only serves to accelerate growth outside direct U.S. influence. 5. Why this matters: the future of global AI wealth and power. This isn't just a finance story. It's a profound story about wealth and power. AI companies and the sectors connected to them are without a doubt the biggest wealth generators of this entire decade. According to major financial tracking, AI-linked investments have created hundreds of billions in new billionaire wealth, especially among the tech founders and investors deeply tied to AI infrastructure and its foundational models. For regular investors, and particularly for those with a long-term mindset, here's what this all truly means. First, capital allocation will increasingly be global. Wealth isn't exclusively being created in Silicon Valley anymore. It's being created wherever AI innovation percolates, and that absolutely includes China. Second, regulation shapes the battlefield, but markets will always find a way around it. Smart capital flows are incredibly adaptable and will relentlessly seek out opportunities wherever they yield returns, even if policymakers try to slow them down. Third, institutional investors possess the power to reshape global tech leadership. Money from U.S. pensions and endowments doesn't just chase returns, it actively exports them into competitive ecosystems, fundamentally changing the landscape of innovation worldwide. And finally, long-term, geopolitical considerations matter more than ever. AI is no longer just about software supremacy or automation. It's about economic power, military relevance, and strategic advantage on a global scale. In essence, the billionaire investor who raised billions from U.S. institutional money to fuel Chinese AI didn't just place a bet. They actively shifted where some of the world's tech wealth and capability will be built for generations to come. And that, truly, is the ultimate lesson for anyone who wants to build a business, create massive wealth, or win globally. Don't wait for the rules to change. Understand the incentives driving capital and align yourself ahead of them.